I'm a short swing trader and always get confused to identify last month of supply and last month of demand in shorter references. Always remember, keep it simple. Just look at the HVNs. What is the worst thing that can happen is you will identify a wrong HVN. Let's say market is trading here and you identify this as your last month of supply. Now, this again is a last month of, these are last month of demands, right? This again is a last month of demand. Now, as I just explained, last points of demand and supply are trade locations. They are not support and resistance. They may offer support and resistance, or they are expected to offer support and resistance, but they are not support and resistance. All right. So what happens, in situations like this, the people will come in and put in a buy order here, and the market just cuts through it like hot knife through butter. What is happening? Now they are thinking that okay, Dean is telling something that is not correct. It does not work. Market profile does not work because every time I mark HVN as last point of demand, market moves through it. Why? Because market is not obligated to stop at an HVN, right? See, anyone who bought here overpowered, the sellers. Market went higher. Now it is coming back down, and if these buyers are not going to defend it, why would it stop here? It will not. So as soon as it breaks through it, you now know that at least in this 4 days, we don't have strong buyers yet. Where is the auction likely to find it? It has to go lower. Where? Next HVN. It is coming towards next HVN. Make sense? So as soon as this happens and you get a pullback, you can find a good place to short. Make sense? And then on this day, it has opened lower. But again, it is showing now Nifty is weaker definitely. So if you go to this chart, now there is a discord between indices, can't help. There will be this situation. Now we just talked about this, that if you short here and if it goes below this low, then you move the stop loss. It has not, so your stop loss is still somewhere here, and market is going higher. If you have already moved the stop loss to cost, if it hits it and again starts going lower, you have to short again, because that is how the game is played. So we are going towards those lower HVNs. What are the levels? So let's say this is somewhere around 21,575. So 21,575 somewhere here to 575. All right. So this is where the market is likely to go. Make sense? So don't look at those HVNs as support and resistance. They are likely to provide support and resistance. Now you look at all the HVNs. All right. So if I go to, if I combine these 2 days, then the composite HVN is still a resistance. All right. Now here we have a lower value area. Another HVN is forming. 21,750 has to be respected if the sellers want to be in control. Now, when I say that, does it mean that as soon as it comes here you sell? No. You wait. You see if we manage to take out today's high, and then if we fail, then you can find a good place to short. You can take help of VSA. All right. But if it starts accepting above this, now what I know that okay, let's say sellers overpowered buyers and push the auction lower, and we were supposed to go and test 575. We did not do that. Not only that, we have now gone above previous day's HVN. What does that tell me? That all this sideways activity, buyers are coming in, and now they want to explore higher. So what are the references? This and this particular composite HVN, not the single HVN, composite HVN. Composite HVN is going to be important. Let's say somewhere around 21,900. So if it comes here, it is supposed to defend. If it does not, what is going to happen? We are going to go even higher. We'll challenge this high. That is how you have to look at the markets. All right. If you just keep looking at it in terms of support and resistance, I know because I have done that, and you will face the problems. All right.